All right, everyone, welcome back for another episode of Carnivore Trades. Doing a special video here today to be released over the 4th of July weekend, or week, shall we say. And this is one that I've been kind of talking about, or a subject I've been talking about a lot lately, and I feel like it deserves its own video because I don't think that I don't really have time to explain it in the daily videos like I do here to do a special video. And it's something that I think that is, I don't think it's fully understood by a lot of, viewers and just by a lot of market participants in general. And before we get into it, let's get to 4,000 subscribers here. So don't forget to like, comment, subscribe to the channel here. And come find me at carnivoretrades.com for swing trading alerts and analysis if you like the content. But very important thing. So what do I talk about pretty much every day here? I'm sure you've heard me say this multiple times. If something's up, something else has got to be down, right? I've done videos on this, why breadth doesn't matter, despite that being the biggest bear argument, right? The biggest bear argument right now that I see is the breadth there, and the breadth is, the Mag 7 NVIDIA is the only thing holding the market up. And as soon as NVIDIA sells off, the market's going to crash because the Russell 2000 and the equal weight S&P and the equal weight Qs, which are at all-time highs, but I keep hearing about how they're crashing, but they're not. But I keep hearing that Mag 7 is the only thing leading, and that's been the case for almost 2 years now. If you go back to, we'll say 18 months. I mean, at least to March of 2023. But ever since the low in, we're coming up on the low in 2 years ago from October of 2022, rather. But in any case, why does breadth not matter right now? Why have I been saying that over and over and over again? You've heard me use the term dispersion. So that is really the long and short of it here. I'm going to try my best to explain it. I'm probably not the best person. I know I'm not the best person to explain it, but I can at least do it enough so that I think people can understand here a little bit. If you guys want a better understanding of it, look up anything that Jem Carson has done on the matter. And I think he does a fantastic job in some of his long form interviews on how to explain that. But essentially what we have here is, so let me just, let's flip over. I got better drawing tools on TradingView here. So dispersion refers to generally, I think the best way to show it in representative, or best way to represent it here is the 1 month correlation index. And you can see it's basically, at the lows here. Let's use a line chart. We're back and we're down at 2017 levels. And essentially what dispersion means is that the indexes themselves are pinned, meaning that, let's say right now, actually I can tell you for a fact that the largest GEX by strike and expiry for, we're just going to say July 19th, which is the next OPEX in 2 weeks. You've got a lot at 5,500, 5,400, and then max move to the downside would be about 5,300 on the SPX. Okay, that's where, that's where the gamma exposure is. And that's where essentially we are pinned to. So right around 5,300 would kind of be max move to the downside. Forgive all these lines here. I've got them on there for day trading purposes. We can get rid of them for now though. But you can see here, there's 5,550. And we've even got 5,400. We can add that in as well. It doesn't really matter. What matters is that this is kind of the range here that the market is expected to be in. So it's pinned, right? If that is the case, then let's say NVIDIA is down, right? Which it has been over the last 2 weeks. Something else has to be up. I've speculated for months that Tesla was a stock that was going to rebound heavily when NVIDIA started to sell off. Why? Because everybody hated it. It was heavily shorted and everybody kind of forgot about it. And I said, if there's going to be a back off in Mag 7 or in NVIDIA and some of the other Mag 7 high flyers, one of those other ones has got to take up the mantle. Another one that's going to take up the mantle is IGV. again, I don't want to harp on it, but I've told you about this multiple times. Buy IGV, and that's turned out to be really good here as that bull flag on the weekly is playing out. But so we look at the S&P, right? Has it crashed with NVIDIA? Here's the top, the 20th, right? And here's the top on NVIDIA, the 20th. And, you know, that's almost 20% right there. Did the markets drop even more than 3%? No, I think we dropped like 1%. And now we're at new all-time highs, new all-time closing highs. How can that be? I've been told that the Mag 7, as soon as NVIDIA sells off, the whole market's going to sell off. And I've been told that breadth is a warning indicator that the market is up on thin leadership. And that means that, you know, at some point we're going to crash. Well, I've been hearing that argument, again, for 18 months. And thousands of points later, here we are. So maybe it does come to fruition. But, you know, if you've been calling for it since 4,400, and I know there's accounts out there that have been telling that public subscribers and clients to be short and stay short and continue shorting since 4,400. So, you know, if it plays out here and we go up to 6,000 and then we pull back to 5, does that really help you? No, it doesn't. So again, I'm saying a lot here, but the indexes are pinned. Something else has to be up. Something else needs to be down. Until passive flows just push us higher, right? There's, you know, millions and millions and billions of dollars of passive flows all the time that push us higher. Now, another real easy explanation here is, well, reverse repo manipulation, you know, and I've been open about this too. They are goosing the tape. So that does have a lot to do with it. But dispersion here. Haven't you guys noticed that every day that the Qs are down, the Russell and the Dow are up and vice versa? Right? I mean, look at the intraday patterns here. So the the Russell was up in the pre-market. It rallied up in the morning, and the NASDAQ and S&P were down. And then as soon as the NASDAQ catches a bid today, the Russell starts to really come back in. The Dow starts to come back in. It's not a coincidence. This keeps happening. So what do I mean by this? What am I saying here? Why is this like this? Well, if you look at, again, going back to this correlation index, we are at, let's go back to a line. We're at 2017 levels. This is, and I understand why people are missing this because it's not a condition. This is not a condition that happens normally in the market. We are below 2017 levels actually. So essentially what this is representative of is that single stocks will have volatility. So you see Nike getting smoked on earnings, right? But what happens, you know, the next day or whatever, the day after, you know, Tesla gets a big bid. I don't know. You know, Apple has recently taken over leadership here. You know, I can point to countless examples, right? Again, how about, I mean, you know, how about CRM, you know, with speaking of cloud, had a pretty good sell, but IGV's held up, you know, right? So we have single stock volatility, but the indexes are in a range. Why is that happening? Again, I'm not the best person to explain that, but you do have a lot of money in money market funds. And you might say, well, isn't that bearish? It's possible. But we also have not had, you know, derivatives the way that we had in the 70s with high inflation. And those money markets are now being used as leverage to essentially sell premium to the market and keep the market pinned. That's why I've been talking about these pinning ranges here. So the more money comes out of the stock market due to rates remaining bid, rates holding up, and you can see the 10-year has not gone down really, the more of a pinning effect this creates. Hopefully this is making sense. I know I'm kind of going all over the place here, but basically what I'm saying is that with correlation at these mega lows here, you're going to have poor breadth. It's that simple. So if a day where Mag 7 pulls back, the Russell's going to bid, the Dow's going to bid, and vice versa. So that's why we've been able to continue to just ignore macro, ignore leadership, bad leadership. And that's why I've been saying certain time effects need to take place too. We need to do damage to the chart, right? You need to break these levels, this level, and then this level in order to unpin that volatility, right? So dispersion here, that's what is kind of driving this market here, the low correlation. Now, what could happen to really unpin things? because I think that's what everybody needs to know, or everybody wants to know. And I'm going to make I mean, maybe a prediction, but you know, if we go back to 2017 and you go back to those correlation levels that were just breaking down, even though the market was rallying up, uncontested rally all year. It wasn't until we had a big thrust in breadth that we had the blow off. Why is that? Because that was the last leg that the bears had. That was their last argument, right? Right, breadth, 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 breadth. Then finally, breadth improves. You get a thrust. What does that mean? That means shorts capitulate. They throw in the towel. Every heavily shorted sector, all the hated sectors start to rally. IWM, right? What have we seen recently? Short squeeze in Chewy. Short squeeze in even GameStop and AMC to a degree. Rivian. Right, so some of these stocks that have done very poorly and that are very hated, Tesla, right? It's not a coincidence. This is catching up. When you see that breadth thrust, see, everybody thinks that breadth is going to deteriorate even further, and then, you know, the rest of the market, the Mag 7 is going to go down. I think it's actually going to work the other way. I think you'll actually see a vertical move where, you know, Russell 2000 has higher lows here. Maybe it does one of these, and then you see, you know, equal weight S&P, which is, again, the bear's favorite argument. And you've got a wedge here that is on, you know, in danger of having a failed breakdown here, and it's right below all-time highs. You know, if this starts to take off, you'll see a breadth thrust. QQQ equal weight. Again, pretty strong pattern. Look at the weekly. I know it's a little messy here, but weekly ascending triangle, that's a textbook bull pattern. If that starts to take off, the Russell starts to take off, that's what's going to actually unpin volatility enough, unpin the market. Why? Because the hedges will come off, and that dispersion will go away. Why do we keep going higher? Everybody tells me that there's nothing but bulls in this market. If that's the case, why are we still going up? You have to have hedges in order to go. Hedges have to unwind, right, in order to go up. We're hedged. We have event volatility yesterday from Powell. We have event volatility today from jobs, and we'll have event volatility on Friday from jobs again. So that's kind of why we keep going higher. If you don't understand that, I understand it takes a little bit of time to get used to and kind of wrap your head around, but that's essentially it. It's really that simple. That's why the macro doesn't matter. That's why I've been calling it the summer of narrative destruction, because, you know, the macro traders are just like losing their minds right now. And not respecting the charts. I said yesterday, it hit this really hard. Look, this bull pattern, right? Up, pullback, up, pullback. Consolidation through time, not price. There's nothing bearish here. So follow the charts here, and they will steer you in the right direction most of the time. Trying to be a macro genius isn't going to work in this environment when dispersion is this high and the correlation starts to break down. But hopefully that helps clear it up a little bit here. That's why I've been so confident that breadth isn't going to matter. I know I've been getting pushback on that, so that's why I wanted to do this, to kind of clear that up a little bit. But I do think that there's a possibility that it does end with breadth thrusting and improving, and that's what like kicks that last leg out from under the bears. Like, that's it. We just destroyed your last argument. Then you get capitulation, and, you know, now does that mean you want to go short? When we see that, no, because we can go up 10% in a matter of weeks if that happens. You want to be on the ride for that one, but very careful, very cautious, trailing stop, etc. But yeah, anyway, let me know what you guys think. Does that help explain the dynamic a little bit more? Does that help explain, do you guys understand my position a little bit more here and why I've been so adamant about buying dips this whole way up, which has worked? Let me know in the comments if you have any questions, concerns. Tell me I'm an idiot. That's fine too. As long as you give me constructive criticism, I'm okay with that. So anyways, guys, I'm going to wrap it up here. You guys have a great 4th of July, and I will see you guys all on Monday. Come find me at carnivoretrades.com. Subscribe to the channel. You guys take care.